Good day and welcome to this edition of the Royal LePage Binder Market Report. My name is Dominic Papa. It is December. The holiday season is upon us, and we are going to talk some real estate as we always do. Get you caught up on everything that's happening in the real estate market in the Windsor Essex County area, even throughout the province, the country, maybe even. The man that we have for this, he knows every market that is out there. That is for sure. He is the broker of record at Royal LePage Binder. Mr. Frank Binder joins us. Good day to you, sir. How are you?
Good afternoon, and absolutely the best of the season to you, Tom.
Yes, happy holidays. Hard to believe that another Christmas is just around the corner, and
we're definitely approaching it. Yeah.
This year, I'll tell you what, I was thinking about all of this, and I was thinking this year has just been a blur. It's just been a blur, but
Yeah.
in some areas good, in some areas a little bit rough, but we're still here, so that's the good thing. And,
Exactly.
Got to make it a good. Got to make it a good holiday season.
Yeah, we're looking forward to that. So,
all right, well, let's get right into it. I saw an article the other day, Mr. Binder, in Toronto. It was relating to Toronto. I'm sure you follow everything, anyways. But it talked about how much prices were coming down in the Toronto area. I'm guessing.
Sure.
Is that the trend right now throughout most of the markets?
Well, there's really there's two segments to it, right? So generally, that is the trend that prices are coming down somewhat. It depends on whether you're talking about the monthly averages or the annual averages, because the annual averages they're a bit of a slower down spiral than a monthly average, and we've gone through that before. But basically, yes, the answer to that question is yes. The difficulty in Toronto is that your prices were really quite high. And so when you talk about a drop in Toronto, you're going to get a much greater drop in Toronto, and much more of a drop is realized there than maybe than we have, right? We didn't get as high, and if their prices were inflationary or really very high because of inflation, that's going to fall off very quickly. And so basically what you're dealing with that. What you are dealing with us, and we'll get into this in our slides, is that upper end of the market has that's really where the drop has occurred. But the lower end of our market is pretty steady. So we're not seeing as many drops there. We're still seeing some multiple offers and so on and so forth. So there is really, in effect, at the moment, two markets operating in our area, and you've got to be aware of that. We are seeing a real drop off in our upper market. People are choosing not to do that, and I'll explain why that's happening as we go through our slide.
Yeah. Let's get to the charts because that tells a lot of the story here, and that is where you can elaborate on it, Mr. Binder. The first chart we're going to look at is the number of residential listings in 2022, and it really peaked in the summer months in June, July, and now it's a steady decline.
It's on a steady decline, right? And so basically, what happened, we're dropping off, and as you can see, dropping to 726 listings. That's not totally abnormal for this time of year anyways. But what we did see is we had a lot of uptick because, a lot of people were, hearing about the high prices, and a lot of people want to jump in the market there in the summertime, which they did. And then as we go through this drop that we've been having on a regular basis, where there's less and less buyers, people are coming to the realization that they may not get their anticipated sales that they're hoping, or the sale prices that they were hoping for. And as you see that, they certainly come out of the marketplace after a little while. We're also coming to the winter months where people don't sell their houses or put their houses up for sale. So a combination of both those things are dropping. We see that continued drop in the actual the amount of listings that are going on the market right at this point in time.
Yeah, I think you more or less. I just had a question come to mind there, Mr. Binder, and it goes with any industry. But is sales, whether the market's good, bad, and different, is there a peak season and is there a downtime? Is now the downtime usually for the real estate?
We're very seasonal, right? Winter season for us is not the best time. Christmas is not the best. That's great for retailers, and that's where everybody spends their time. So they don't come out looking for houses during the Christmas season. We actually have our half months are December and January, where people don't really shop as much and do as much. They take time for families, and that's to be expected. And it's not it's sometimes, for us, that's exactly what we expect to see. And it happens every year. Our peak time starting in the spring, because we want our families to move in the summer, to get to a new school, to get all those very different things. So that's generally the thing. And you have a secondary higher peak in the fall. We're coming to the end of that fall market now. We've hit the end of that fall market at this point in time.
Okay, let's get to the next chart and that'll give us a little more information. The number of active listings at the end of the current month.
The number of active listings is really, really important because what we've seen, you'll notice that we hit a high in July of 1,650 houses that were available. That's roughly about 2 to 3 months worth, at least 3 months worth of sales. And so we hit a high of that. A lot of people putting their properties up for sale, trying to take advantage of the market. Albeit a bit late because the high price was back in February, March. So by the time the message gets through, it's a little bit late. And now you see that we're still tapering off, and we're down to a low of 1,152 houses for this last month. Well, it's because it's a winter too, and people are not putting their houses up for sale because of this. We got still some people trying to get some sales done before, but it's not as many. And you'll notice last year, I wanted to bring this point out, but because if you look into November of last year, there was only 317 houses. And you wonder why we peaked in February. Well, that's the reason. We didn't have any houses going up for sale. Now we have a relatively decent inventory of houses. You'll see many more disappear in the next month to 2 months because a lot of people take their houses off during the month of December, only to start in the spring again, right? So we're going to see that kind of thing happening. So it's not unusual for us to see this kind of a drop into the active listings in our market at all.
What really stands out to me, Mr. Binder, in this chart, you look at the early months, January, February, March, and you mentioned how December, January are slower, but you look at those earlier months, and all of a sudden it's almost like a rocket ship. It took off. Is there any way to prepare for that? Like if you're a buyer, or in your case, a real estate agent?
No, I mean, we always know that we're going to get a great uptick and it's really weather related a lot, right? So in the spring, it's really weather related in terms of how many come on the market right away. But everybody is waiting to put their houses when, the grass is growing and the flowers are blooming and everything like that. So that's really what it is. You'll notice that this is actually peaked back in July. That's where it went. So even the summer months, things were a little delayed in getting into the marketplace, and we had a lot of people jumping on the bandwagon, trying to get their houses, get the highest price they could for their houses. What happens then is that basically, by that time buyers were slowing down already, and you just didn't have as many buyers to pick them up. So what you saw was a quick tapering of that. It didn't stay there very long. You see a quick drop off in terms of listings. Because people were not going to realize the prices that they were hoping to get like they did at the beginning of the year.
All right. The third chart we want to look at is the number of residential sales in 2022. And again,
what are we seeing? Well, first of all, we're seeing it pretty flat. It's from July on. So when you look at that, you look at the listings in July, you hit a peak, and you see the sales in July, it hit a valley. And so we have the opposite things going on. We have people putting their houses on the market and not as many selling. And so what we've got is basically, you see that the selling or the buying prospects are basically flat, and it's falling off. And now we've seen a low of 331 houses in November, which is still relatively low for November. We had a 50% drop, and that's exactly what's been taking place in the last 4 or 5 months. So we see a continuation of that. Why? Well, it's the same reasons. Inflation. I've got to concern myself about my household now. Can I buy the things I want to buy? I have to recalibrate my mortgaging. All those things are all part of it. We also, there's the other side. Remember we talked about that high side? Well, the buyers who are going to make an equity shift, they've got to look at pricing my house. But wait a minute, what's going on that side? Prices are dropping. So now I've got to figure that out. Plus, I've got to figure out the mortgaging if I need mortgaging. So I got two things to contend with: both a price drop and interest increase. So now I've got really heightened concern, and I'm totally uncertain of what to do. So what we've seen is almost that upper market kind of evaporate away because of those concerns, and it's just much more preparatory work that they've got to go into trying to get ready to buy or sell, right? Especially those people who have to sell to buy. Those people who have to sell to buy, they have two concerns, not just one. Buyers who are first-time buyers have one concern, which is the interest rates, right? So that's what you're seeing.
So many variables to be considered.
Always.
It's unbelievable. You never think about it, but that's why you're talking to us to educate us here.
Absolutely.
Pretty interesting stuff. The fourth slide, average days on the market. And of course, at one point earlier in the year, you couldn't even, I don't know if they even lasted a couple of days, but it's getting longer, obviously.
Yeah, there were a lot of places that were selling in a week, in 10 days for sure. And you see the average days, that's an annualized rate. So what happens, they're slightly higher than sometimes some particular houses. But you see that it's been climbing, and it continues to climb well. And the reason for that is strictly that you've got a supply. So if I've got a lot of supply, it's going to take longer to sell the supply. I've got more choice, so buyers take longer to make the decision. Because if I'm going to be able to see 5 or 10 houses as compared to 1 or 2, which is what I was looking back last year, I didn't have much to pick from, and I acted on it right away. Well, I've got more time, so I'm going to take more time to buy a house, and that's exactly what's going on right now. It continues to get even into a longer period of time. Sellers, on the other hand, I'm competing with more houses, so I'm going to expect a bit more time. It's not unusual, though. These times are not unusual because our normal market pre-pandemic, we would have seen a 20 to 30-day process. It wasn't totally unusual. So we're not getting really crazy, but we can't compare to the pandemic. The pandemic was a little bit of a one-off. So we're getting back to what we call normalized. A balanced market that's normalized takes a little time. You're going to negotiate a sale more often than not, and you're going to go from that. Do we have shorter than that? Of course we do. We still have offers, multiple offers in houses that are only lasting a week. A lot of that still in the lower end of the market where people are still trying to buy. That's dominating our market right now. So, but you're seeing the average days are going up. It's getting to be a much more of a normalized type of market.
Bring your patience.
Yeah.
Bring your patience, right?
Bring your patience. Absolutely.
It's all good. It's worth it. It's worth it. The next slide is the monthly residential sales percentage.
Yeah, and that's that tells you a story right there. I mean, all you have to do is take a quick look at that, and you're going to see that. Now we've been adjusting our price levels, and now you see a 50% drop compared to the year before. I hasten to add, though, what did you have the year before? You had huge sales, and you had higher prices. And so basically, you've got to look at those, and you got to simply say, well, I'm comparing to a pandemic year, which is really an anomaly to what we had. But this is concerning because we are continuing to see drops in the sales percentages. We're getting many more listings to sales. Now, I hasten to add, in other parts of the province, this is not the case. This is a Windsor case because we're not seeing that necessarily in London, in the various different other cities where the sales to listing ratios are not that far down, only because they're not getting the listing side. You got to remember, we're comparing this to the listings, right? So the bottom line is that because we've got such an uptick in listings, we're starting to show those numbers, right? And that's one of the parts of this equation that we have to really pay attention to. But it is a bit disconcerting that we dropped that low, and it's just one of those things. It's we will have to the adjustment will be made hopefully after this last interest rate increase, and we'll see a little bit of an easing of this marketplace in the new year.
It's an interesting chart, that's for sure. The next one, it's two charts side by side comparisons. And you can explain this one, Mr. Binder.
Absolutely. So what you see is, remember we talked about the upper market. We're considering the upper market over the median. The median is around 550. So you look at the upper market at 550, and you see that you had 159 sales there in November. You see on the bottom side 204 sales under 550. So who's carrying the day? It's the lower end of the market that's carrying the day at the moment, as we continue to drift downward from a high of 302 sales in the upper market right down to 159. So, you can see that the upper market has lost steam. There's no question about it over the last four months. And what you're seeing is basically a flat market all the way from July right through to November. And we're seeing a little bit of an uptick. So you've carried that momentum in the lower end of the market pretty much throughout this last. It hasn't really changed a lot. It's 2/3 of the business, really. 2/3 of the business in the lower end of the market compared to 1/3 in the upper market. So, and we've also a lot less $1 million houses being sold, and so on and so forth.
Is this kind of getting back to normal again, Mr. Binder?
No, because we usually have a pretty good upper market. If you look at the graph, look at the upper market. Other than the month of March, the market was dominated by the upper market, right? So it was definitely dominated. Look at March, how it dominated there. You had 507 sales there. The upper market really dominated the marketplace. So this is a bit of it's a little bit of an anomaly. What you've got is you've got a bit of a change, not really a change, but really you've got a shift in the market where the lower market is dominating, right? So that's kind of where it is. Yeah.
Okay, let's go to the next chart, and again, it's side-by-side comparisons here, and this is the annual average sale price and the monthly average sale price.
Yeah, yeah. So the average, like I've said before, the monthly average, we as realtors really look at that a great deal more because we're trying to set trends on that. But you'll see that the annualized rate is just a small drop. It's been on a little bit of a slide all the way from March all the way now to November. It continues to drop, and that's being affected by this lower part of the graph where you see a monthly rate. And you saw in August where it kind of hit the bottom and it basically just slid up to October, and now the sudden drop off in November. Not surprisingly, that the average sale price has dropped off in November because the fall market is really coming to an end, and so that's not totally unusual. But basically, it continues to put downward pressure on the average sale price, and we see that. And I would expect that you're going to continue to see a slight drop in the annualized rate to complete the year. You still probably be north of 600,000 for the year, but on the annualized rate. But you'll probably see that same kind of number come on the monthly average. It's basically been it's gone down, as you can see, quite quickly from March right through to July. And then it's kind of hung around there at about the same level. And that's basically what we're seeing.
All right. Our next chart then, again, we're going to do a comparison here. Year-to-date sales list ratio and then the monthly sales list ratio.
Yeah, and you see in this slide how that really, look at how it's just from June on, it's basically stayed around the 50, 55, 51, 50, 50, 50 all the way along. And you see a bit of a difference in the monthly. Okay, the numbers go down below 50 and up again. But notice how they've normalized in September, October, November. That the monthly rate is now basically what the annualized rate is, and that's basically it. But the big story here is going back to February, where we're well into 82 of. It's basically saying 82 every 100 houses we're selling. Okay, on the monthly basis, 81, and then you start seeing a tapering of that over time. 50, though, it's really important for us to note that even at 50% of the houses selling, that's what we call a balanced market. Anything between 40 to 60% is a balanced market. That's not a bad place to be. It really is not a bad place. You're getting reasonable sales in the marketplace on a monthly basis, and that's not a real bad thing to be, quite frankly. But we really have it's now stabilized, which is really important too. It's important to note that it has stabilized and will continue to be stable for some time.
Steady's good.
Steady is good. Absolutely.
Steady's good. So we like that. That's good.
Yeah.
All right. Final chart we're going to look at, and we always check into this one, and I always like to hear what you have to say about this. The style of homes. This is for November.
Yeah, it really, the story hasn't changed much here. It's just ranches.
No.
Ranches still rule the day in terms of the number of sales every month, and you know, it's kind of interesting. You know, in other communities, quite frankly, you don't get this because if you're into Toronto, you never see a ranch. You hardly ever do. Or you see in the old suburbs of Toronto, but you certainly don't see it in any of the new outlying areas of Toronto. They're all 2 stories and on a smaller lot. And you know, when we drive through, all you have to do is drive there. You can see that. And so it's quite interesting that we've got more ranch styles houses that are still doing that. Whether that will always be the case as we build new houses now, and most of them are being 2 stories and so on and so forth, that we'll see what that brings. But bottom line right now, we still have the ranches and bungalows and raised ranches kind of ruling the day in our marketplace at this point in time. So, but it's a little bit of an interesting graph, right?
Yeah, I need you, Mr. Binder, to look into your real estate crystal ball and just give us a prediction for next year, one that you think may come true.
Well, I think until March or April, it'll be just as we got what we have right now. Don't look for any real improvement until April, as far as I'm concerned. You're going to see much of this. We're going to kind of be in a lull to that point. I think really if I only want to bring one thing and bring one condition to my opinion, and that's whether or not we get another rate increase in January. Don't know if that's going to happen. There's still talk of it. If the Bank of Canada pauses their rates, which they should be doing, quite frankly, after 7 increases in a year, that's just, you've jolted the economy enough, quite frankly, in my opinion. And I think really, if they don't increase, the more that's the more certainty it's going to bring to our market for sure. Because if you don't do something, and people know that they can count on it to make listen, every decision we make in real estate, it's a 2 to 3, 4 month out decision. So I can't have somebody constantly changing the market on me as I'm trying to make the decision. It's really, really important that they have that stability for a period of time. So we're looking to have that. And if we get that, we should see improvement in April for sure.
All right. That's a good look into that crystal ball. That's for sure.
Well, one thing, don't think that suddenly the prices are going to climb right back up. That'll be a very slow process. Most people are, and I'm one of those saying maybe we might get a slight increase, 3%, 4%. Don't be looking for much more.
All right. I'll make a prediction. Okay, Mr. Binder?
Go ahead.
The Toronto Maple Leafs are not going to win the Stanley Cup.
Oh, that was pretty
How bold was that, right?
It's a safe bet. It's a safe bet.
It's a safe bet. That's right.
All right.
Mr. Binder, it's been a pleasure doing this with you for the last few months.
Yeah.
I look forward to the new year and more education from you for sure. We're very blessed to have you in our community guiding us this way, and certainly we wish you and the Royal LePage Binder family the best of the holiday season, and certainly a safe and happy new year. Okay.
Thank you so much. We appreciate it. We really appreciate your help.
All right. That's this edition of the Royal LePage Binder Market Report. Again, if you want to get any real estate information, I encourage you to go to the Royal LePage website, go to their social media. They have all kinds of great information, and all of the agents are available there. Mr. Binder's available. They can give you good guidance in the real estate world. On behalf of everybody here at We Digital Productions, we want to wish you a happy holiday season. Merry Christmas. Stay safe, and we'll see you again next month in January to talk more real estate. Until then, this is Dominic Papa wishing you a great day. Take care, everybody.